When I analyze sectors, one of the things you're going to hear is this terminology called 8-panel analysis. I'm going to walk you through what an 8-panel analysis is. This happens to be, for our example page today, the healthcare sector versus the market. You'll notice that on both sides of the page, we show the words relative performance. These two charts are exactly the same. And that's what the black lines here are. This is the relative performance of the area that we're looking at versus the overall market. And if you look down here at the bottom of the bottom chart, you'll see the date scale. So you'll see that these charts go back to 1990. So a nice long data set. In my methodology, the most important chart for me is this second chart on the left-hand side. And you see this acronym here, ASM. That stands for Analyst Sentiment Measure. And this is my proprietary earnings estimate revision line. Now, why is this important and why do I look at it? Is almost every area of the market, sectors, sub-industries, and individual stocks have what I'll describe as a natural profit cycle, where this ASM line will oscillate from high points to low points over time. And knowing where we are at any point in time can be very valuable information for portfolio positioning. When we're at these very high levels, what that's telling us is that Wall Street analysts at these times are as optimistic on this group relative to the market than any time during this period. What my work generally shows is when we have too much optimism, that ultimately becomes a contrarian sell signal. Too much good news becomes bad news. Same thing down here at the bottoms. When too much bad news is here, that ultimately becomes a contrarian buy signal. When too much bad news ultimately becomes good news. So in its purest form, when we look at the ASM within the sectors, what we're looking for are these outer edge readings, either too much pessimism or excessive optimism, to potentially look for that group to have a reversal. We take this red line in this chart, which is the main ASM indicator, and we pull it up here into the top chart. We do that for two reasons. Reason number one, I want my clients who do look at these charts to see the general correlation between the earnings line and the relative performance of the idea we're looking at. I would suggest that it's always important to know where we are in an earnings cycle. The second reason is the bigger reason, and it's going to be a big statement, but the research will back it up. Almost every major rotation from one area of the market into the next tends to start and end with major earnings revision turns the way that I calculate it. So this is really, really important information. So we're looking for, when these revisions get to these outer edge readings. You'll notice that these very low readings, before we begin to what we call positively inflect or have a second derivative turn, you'll notice that the index, the scale, has a minus sign in front of it. So what does this mean? So when I use the vocabulary that the earnings revisions are starting to get better, that does not mean that the analysts are raising numbers. It's a very important concept. This means that the rate of change of the bad news is getting less bad, which we refer to as a second derivative change. By the time the analyst community generally starts raising their numbers, my research shows that areas have already begun to outperform. Stocks are forward-looking discounters. We then bring in the other two charts on the left-hand side. First one is a relative forward PE. The second one is a relative trailing price to sales. So these are the two simple valuation metrics. When this earnings revision line gets very high, a lot of optimism. And the valuation metrics also get to high levels. This is suggesting to me that a lot of good news is priced into a stock or an area of the market. And these are areas that I generally tend to move away from, because now a lot of the good news is already in the price. When this is at a low level, can we get one or both of the valuation metrics to show that the area that we're looking at is somewhere between neutral to attractively valued? So now we have an attractively valued area with low expectations coming from the earnings revisions. This is really important because my research shows that almost every good idea, if we look forward after that point, starts from this point. Once we have that, some ideas that are percolating from the left-hand side of these charts, I then bring in the right side. Very fancy, what we call sell side acronym, PRO. That stands for Price Reversion Oscillator. And what this really is we're looking at the rate of change in the relative performance chart. And you'll notice here that there are three different time periods, 13, 26, and 52 weeks. Why do we look at this, and why should anyone pay attention to this? My research shows that almost every area of the market trades with a very natural rhythm where it outperforms by very specific amounts over very specific time periods, and then it goes all the way back down to the bottom and it underperforms by very specific amounts over very specific time periods. What I try to do with my research is to marry the left side and the right side together, is that when the earnings revisions are low, valuation levels look attractive. At that same time, can we get readings on this right side that show this group at the same time, what I call at that lower boundary? We use this analysis now to build an entire portfolio by looking for ideas that are at one of these outer extremes, and that becomes the ideas we begin to move towards, and ideas which we tend to move away from. This is not information that's readily available. You get to hear what I'm telling institutional clients. I share with you in my products what the institutional clients are telling me. And this can be a very valuable piece of information, analytical capability, and insight for someone in the FS Insight user base to help them properly manage their assets. So I hope you found today's sector explanation and how I use my 8-panel analysis helpful. Thank you.